Welcome, I'm David Geiger. The U.S.-Mexico-Canada agreement is officially in effect. This week, the deal replacing the North American Free Trade Agreement started up, potentially boosting American agriculture by $2 billion. One of the key winners is dairy. USMCA could be worth more than $300 million a year for dairy producers alone. However, lawmakers and agriculture leaders say enforcement of the deal is key. Canada is already proposing tariff rate quota allocations counter to its commitments, and Mexico has stopped approving biotech traits for U.S. firms. Chairman of the House Agriculture Committee, Collin Peterson, says they plan to keep a close eye on the deal.
So we need to be vigilant, and we need to make sure that the agreement is enforced and it goes into place the way that it was intended. And I'm sure all of you will work with us to make sure that's what happens.
With USMCA officially enforced, $1.4 trillion worth of free trade is thought to be safe from President Trump's threats to break apart the three-nation NAFTA. With many agriculture groups announcing relief the deal is done, statements from the U.S. Grains Council, American Soybean Association, the Farm Bureau, and many others call it a huge win for American agriculture, especially during tough pandemic times. The Farm Bureau estimates COVID-19 has cost agriculture revenue more than $50 billion. Iowa Senator and member of the Agriculture Committee, Joni Ernst, praises the deal and sees it as a sign of getting more trade deals done.
I do think it is important that we continue to tout the success of this phenomenal trade deal, and hopefully this will lead to many more in the future with other trading partners. And I think that's something as farmers we can all get behind that. And I love the point that, there are many more mouths to feed outside of the United States than within the United States.
Those potential new trading partners include the European Union, the United Kingdom, India, Kenya, and even a potential reconsideration of the Trans-Pacific Partnership. And the markets have made it most of the way through the week. Our analyst has the details.
Well, so far this week, we've seen really a tremendous rally after the stocks and acreage reports that caught the market off guard. We've been looking for something like this in the corn market, to be honest with you, and we use the Commitments of Traders report really as our template following the commercial action. They've been positioned for a big rally, and now we kind of have a delay. And so after you put this much on a market heading into a long weekend, it's definitely reasonable to assume that we'll see a pullback. So we're seeing a lot of these positions coming off here. And certainly we're seeing farmers selling. We've been recommending at least getting put protection on for all of our clients. We're finally starting to see the cattle break out a little bit. We do believe that we'll see higher prices later on in the year. We're just not sure of which short-term direction the market will take. And it really does depend, in my opinion, purely on the technical action of which side of this range we break out of. The hog market has been tough, and it'll continue to be tough. We're heading into this long weekend. We have an increased opportunity to make a gap in the market come Monday. So if we gap back up into that old area, that would leave what's known as an island reversal, and that's one of the most reliable technical indicators that has ever existed as far as I'm concerned. That would probably be indicative of a low in the hog market.
And that's all I have for the Agribusiness Report today. Thanks for joining me. I'll see you again next time.